Alright, ladies and gentlemen, MrSotko here. Welcome back to the channel. Got a whole bunch of good news stuff for you today, and the reason why you probably clicked on the video is the first topic that we're going to talk about today, and that is the Bitcoin ETFs were rejected again. So everybody thought the ETFs are coming, the price is going to go up, and it's gone. Even though I don't think they're going to do anything particularly good for Bitcoin or crypto in general, except maybe raise the price, but then again, probably hoard all of the Bitcoin for themselves, as they probably have millions or billions of dollars, which is just not good for distributing wealth very well. So the United States Securities and Exchange Commission has issued 3 published decisions covering 9 different Bitcoin ETF applications put forward by Direxion. ProShares, Granite shares were rejected along largely the same lines of argument. So the heavily footnoted rejection document runs some 24 pages, but the heart of the matter very well could be tucked away on page 22. Under the hearings protecting investors and the public interest. In its analysis section, the SEC notes the commission acknowledged that, compared to trading in unregulated Bitcoin spot markets, trading a Bitcoin-based ETF on a national securities exchange may provide some additional protection to investors, a concern many Bitcoin mainstreaming enthusiasts point out as reason enough to join regulated exchanges. Evidently, though, the SEC doesn't see it that way. As the denial details further, the commission must disapprove a proposed rule change filed by a national securities exchange if it does not find that the proposed rule change is consistent with the applicable requirements of the Exchange Act. Exactly. Including the requirement under Section B, 6B5, because everybody knows Section B5 is the best section, of course, totally. That the rules of the National Securities Exchange be designed to prevent fraudulent and manipulative acts and practices. So then, I don't know, don't manipulate. You know what I'm saying? Like that would be on the ETFs, I suppose. Okay, sure, SEC, why not? So that order shot down all 5 proposals by Direxion. The heavy work out of the way, the SEC basically used the same arguments. Some jargon number, reason number. Similarly titled, Order Disapproving a Proposed Rule Change to List and Trade the Shares of ProShares Bitcoin ETF and the ProShares Short Bitcoin ETF. Now, if you're just listening to this and you're not actually watching it and watching the confusion on my face as I read this, just let me know that letting you know that there is a lot of confusion on my face, and that's literally how they just worded it. Order disapproving a proposed rule change to list and trade the shares of the ProShares Bitcoin ETF and the ProShares Short Bitcoin ETF. Okay, it dashes eager hopefuls immediately. So that is literally how this article is written. I'm not just like paraphrasing and randomly saying words. That's literally what it says. So a bunch of nonsense for the most part. So again, I'm not too excited about ETFs. I was never excited about any kind of Wall Street or institutional investment of Bitcoin because it's not supposed to be institutional. It's supposed to be for the people. It was supposed to be just have a couple GPUs in your card and get yourself some Bitcoin, get yourself some altcoins, and we trade it and we spend it ourselves. But I think it would be a little naive to think that at some point it would get so big that the world or government is not going to get in on it. I think that would have been naive from the start to say that, okay, well, if just a few people are trading this in some mom and pop stores, because I remember back in 2012, 2013, when Bitcoin was starting to get a little bit popular. It was just starting, and I remember reading in a bunch of articles and news that, such and such mom and pop antique store in New York City is now accepting Bitcoin. And it was this big deal because they were like the only store that would accept Bitcoin. And good for them. But the thing is that, how many people are going into mom and pop antique store in New York City, and spending all their Bitcoin? Probably not many. But now that Bitcoin is huge and a lot of retailers are accepting it, or at least, many more than before, and many more than last year, and many more before the year that, and so on, that it's starting to get pretty big. And institutional investors are trying to get in on it after they've seen it went to 20,000, then 6,000, and 5,000, yada, yada. And it's just not going to be good. It's not like they're looking out and they're like, hey, we're going to raise this by millions of dollars, but you're going to keep all your Bitcoin. No, that's not going to be the case. They're going to be buying all the Bitcoin and keeping it for themselves. And it's just not going to be. It's not. There's really nothing all that positive that's going to come out of it. It was supposed to be for the people, by the people, yada yada. But now that institutional investors are getting into it, it might as well just be any other regular stock. It might as well be any other commodity or currency or something like that. It sort of loses the Bitcoin out of Bitcoin when too many investors and too much money is piled into it, and there's a trade-off for being mainstream. It's almost like if you're famous online or you're some kind of famous actor and you can't say this, that, or the other thing. It's just kind of like Ninja, that Fortnite streamer. For those of you who don't know, he's like the highest viewed Twitch streamer, Ninja, and he plays Fortnite and stuff. And the guy can't say anything or do anything without like tons of videos coming out about it, or him having to apologize for this, that, or the other thing that he says. Like he says he doesn't play with female gamers for a reason, and everybody just flips their lid, or some kind of celebrity says something, and then they have to apologize for the next weeks about it. So there is a trade-off. There is something bad that happens when you become popular, just like Bitcoin. So the next article I have here is kind of an interesting one. It's kind of funny in a way, but U.S. Federal Trade Commission issues warning on Bitcoin blackmail scam targeting men. And you might be like, well, what do you mean targeting men? So let's get into it. The Division of Consumer and Business Education of the U.S. FTC titled "How to Avoid a Bitcoin Blackmail Scam." So the FTC's letter focuses on consumer protection and what it calls a new scam targeting men, warning about blackmailing scams demanding payments in Bitcoin. And the brief letter states, here's how it works. Scammers have been sending letters to men demanding payments using Bitcoin in exchange for keeping quiet about alleged affairs. And the letter also explains how to use Bitcoin to make the payment. So among the classic signs of of blackmailing, the FTC lists threats, intimidation, and high-pressure tactics, and advises consumers to report it immediately to the police or the FBI. And cybersecurity Kaspersky Labs recently published a report according to which cybercriminals stole over 2.3 million via crypto scams. And earlier this month, the UK published a report stating that crypto-related scams have led to 2.55 million in investor losses. So I did read some other articles where it showed a little bit more of what the scam letter was. So essentially, it was just a scam letter being sent to people, and I don't even know how they. If they even know about an alleged affair, or if you can just receive this and they threaten to tell your wife. I don't think they're actually threatening anything. I think they're just pretending to threaten, and you're supposed to give them the Bitcoin even though they know nothing. So apparently people are getting letters and it says, hey, like, we're going to tell your wife that you have been cheating on her, and if you don't send us $8,600 in Bitcoin, I think that's what it was, 8,600. There's also other articles about this scam going around that they're going to tell your wife. But I don't think they're going to tell her anything, because I think it's just random letters being sent out, and they hope that somebody's going to send them Bitcoin in order to avoid this. So I don't think they actually know if you're having an affair, or even if you don't, they just send you this letter, and you're supposed to be scared. And I'm sure like somebody somewhere in the world is probably actually going to pay them, just like some of these ransomware where it's not even actually under ransom. They're just like, hey, like, we have your dog. Oh yeah, there was some things on Craigslist that goes around, like basically they find if you have a Craigslist ad that's stating that you lost an animal, like a dog ran away, and then they email you saying, hey, we have your dog, you have to pay us this much in Bitcoin, even though they don't actually have your dog, and they're just hoping that you're going to. So next one is that theories are abound after Bitcoin leaps while BitMEX is down. So we had that big rise earlier, and a lot of people think it was because of BitMEX going down. If you don't know what BitMEX is the exchange that offers 100x leverage, the greatest, fastest way to lose all of your Bitcoin. It's been an interesting 12 hours for Bitcoin and the cryptocurrency finally break through resistance levels. Most of the drama took place within just a few minutes when Bitcoin gained 400 without blinking. It's no coincidence, however, that the event took place just as the popular cryptocurrency exchange BitMEX went offline. And the experience has left traders crying foul and caused wild conspiracy theories to circulate. So shortly before 9 p.m. on August 21st, Bitcoin broke out of the resistance range. It's been trapped for weeks, climbing to 6,800. And traders despaired of Bitcoin escaping the 6,100, 6,600 range. It had been bouncing around without the aid of a major exogenous event. such as ETF news. In the end, it was something that ought to have been a minor event that triggered the breakout. And speaking of ETF news, the question now is Bitcoin going to lose some of its dominance because it was up to 53% ish dominance, up from about 30% when it was at the high because of all the altcoins taking all the money away, and now it's back to 53% or so, depending on the day. And, maybe the ETF news, everybody was dumping all their altcoins because they thought the ETFs were going to get in Bitcoin and raise the price of Bitcoin and only necessarily Bitcoin. So everybody was buying up Bitcoin, but I'm not sure if that's going to be the case anytime soon with the denials. But anyway, BitMEX, which had been scheduled to go offline for maintenance at 9 p.m., estimated for 30 minutes, reopened on time in cancel-only mode, and immediately became clear that something wasn't right, prompting the exchange to tweet, "Some users are reporting difficulty logging in. Trading remained canceled until 10." So while BitMEX struggled to get back online, traders trapped in shorts could only watch helpless as their positions were liquidated. BitMEX wrecked. An unofficial account that records margin calls on the platform went into overdrive, tweeting out beyond godlike kills as position after position was wiped out. In the aftermath of the reckoning, the conspiracy theories were in plentiful supply, which even some accusing BitMEX of deliberately keeping its platform offline in order to profit. There was no evidence to support such an allegation, because there never is, but that hasn't stopped speculation from mounting that it was an inside job. To critics, it's further evidence of Bitcoin manipulation, another example of why margin trading is dangerous. Who would have thought? I've only been saying that for a long time. 100x margin trading? Why wouldn't we get into this? I mean, this sounds just great. That's like, I'll just put all my Bitcoin down to scratch off this little scratch-off lottery ticket I got, and if I lose this lottery ticket, which I'm almost guaranteed to because of the odds are like 1 in 7 to win, I'm going to lose all my Bitcoin. Who'd have thought that that's a dangerous thing to do? If one platform gets to call the shots, or rather the shorts, and it stands to profit from disrupting its own service, it has no incentive to act ethically, critics claim. A less controversial explanation is that BitMEX was genuinely the target of a DDoS attack by an unknown third party seeking to manipulate the market. If that was the case, they were certainly successful and are likely to have profited handsomely off the attack, because crypto manipulation, pretty wild. Again, once something gets too big, then the scammers come out, then the investments come out, and then, it's kind of like, oh, I'm going to take this lane to work, and then everybody starts taking that lane to work because it was really, really fast, and now it's really, really slow, and it's not a good thing anymore. Oh, this restaurant in the middle of nowhere is a really great place to go and have a nice sit-down meal all alone and have a good family time. And then when everybody else figures that out, guess what? That restaurant is not fun anymore. Kind of like Bitcoin, although I don't want to say it's not fun because I still like Bitcoin, but too many people on one thing sometimes can be a bad thing. Bitcoin Cash community splits over Craig Wright's intention to fork the coin. Oh no, not Bitcoin Cash. Somebody save Bitcoin Cash. Oh no, Bitcoin Cash. Anyway, let's read the article. We all know how I feel about Bitcoin Cash. Craig Wright, known for claiming to be Satoshi Nakamoto, founder of Bitcoin, is now after Bitcoin Cash. He has shared his own vision of the crypto asset's future and potential features, which does not coincide with the plan of Bitcoin ABC developer team to evolve BCH quickly with regular updates. Some people fail to understand about Bitcoin is it is intentionally limited in what it can do and how it can be changed. This is purposeful. Bitcoin is designed to be stable money, and for that reason, it's not designed to have new opcodes added outside the need for a few security-based replacements or to be altered, stated Wright in a recent blog. So, excuse me. Wright expressed an opinion that fast and active changes to the code of Bitcoin Cash are not necessary. He also envisions Bcash as the real Bitcoin. It's just not though. I'm sorry. Like, even if Bitcoin Cash is better, like, whether you think it's better or not, like, that's no problem to me. Whether you mine Bitcoin Cash, again, no problem to me. Whether you spend Bitcoin Cash, no problem to me. The one problem I have with it is how it's marketed and how people believe it's the real Bitcoin. It's not the real Bitcoin. It's a fork of Bitcoin, so it can't be the real Bitcoin. It can be Bitcoin Cash. It could be better than Bitcoin if you believe it to be. You can use it over Bitcoin. That's not a problem. It's a real coin, but it's not the real Bitcoin. That's like if like Buick and some of the designers of Buick went on to create, like the Buick 2, like the Buick car, you know what I mean? And it's called the Buick car. And then there's the Buick. It's not a Buick. It's the Buick car. It's a new line. Is it better than the Buick? Well, maybe. I mean, maybe it is, but it's still not Buick. It's a new car. Like it's just not the same thing. I don't see why people don't realize that. So as the real Bitcoin is supporting it for that reason, therefore demanding a more conservative version. So Vitalik Buterin, co-founder of Ethereum, has suggested that Wright's potential fork may be dismissed by Bcash proponents. So the Bcash community should not compromise with Craig Wright to avoid a split, should embrace it as an opportunity to conclusively ostracize and reject him. Bitcoin Craig can go take the ticker symbol from the now defunct cryptocurrency to which it is a fitting successor. Cobra, the founder of Bitcoin Talk Forum, has expressed some support for the conservative approach to running Bitcoin Cash Network. He has expressed dissatisfaction with Amaury Sachet, who is also known as Dead Alnix, for rushing through changes in the code. The criticism arrives just a day after Bitcoin ABC released the code that will be mandatory and put in force after a November 15th hard fork. So this is what happens when you have incompetent rogue developers like Dead Alnix, pushing their agenda instead of compromising. Tired of these amateurs and morons screwing around with Bcash. Oh no, not Bcash. Don't screw around with Bcash. Everything is just gonna fall. All the pillars will just fall, and the world will, the moon will just start exploding in midair, and meteors will be raining down, and it's just terrible if anybody messed with Bcash. Oh no, not precious Bcash. Upgrade with consensus, or don't upgrade at all. So the Bitcoin Cash community has varying opinions on the approach of the effective Dr. Craig Wright. Dr. Craig Wright. While some believe he is a valuable source of direction of Bcash, others consider him a fraud, a liability for the project. Some positive opinions point to Wright's support of smart contracts on the Bitcoin Cash network. Vitalik Buterin is afraid of Craig Wright, it seems. Craig has been one of the biggest drives of smart contracts on Bcash, and I think Vitalik is scared now. No, Vitalik is not scared. Smart contracts aren't coming to Bitcoin Cash, and if they do, they're going to be terrible. No, he's not scared. I promise you. Not Ethereum. Not the thing that virtually every single ICO runs on. Have you bought an ICO? Have you ever seen an ICO? Have you ever gone to an ICO website? Sure, you have. Even if you haven't ever bought one, maybe you just look at them sometimes. Maybe you just hear about them sometimes. Let me just tell you, they're almost all ERC20 tokens. Virtually every single one of them. I would say with pretty much 100% certainty, that 90% certainty that they're all ERC20 tokens. I know that was the most confusing thing I've ever said. But all those smart contracts running on Ethereum, all those ICO tokens running on Ethereum, Sotko coin, Ethereum. Make your own token, Ethereum. So nobody's making too many for, like Neo. Nobody's making for the other smart contracts so much. They're coming slowly, and there are some, but virtually all of them are Ethereum. Ethereum has no competition at the moment. They just don't. EOS, still not a competition. I'm sorry. Neo, still not a competition. Maybe one day it will be, but not at the moment. So no, not Bcash. I'm sorry. No, that's not a competition at all. I don't know who you are, but no, sir. The Bitcoin Cash Network has, in the year since the fork, shown to be influenced by Bitmain, which now owns more than 1 million Bcash. Oh my, who would have thought? And is one of the most influential miners. The other center of influence is the work of the development team, Bitcoin ABC. Because that's going to be just an amazing Bitcoin ABC. That's going to be what I want. Bitcoin Cash price remains relatively depressed, though mostly due to the general mood of the markets and low volumes. The internal conflict on the network is, for now, a flaw mostly known to the community of Bcash supporters. Bcash trades around 551, with the last week showing volatility. Bcash went down as far as 515 from a short-term peak of 605. But, so that's all I have for you guys today. I hope you guys enjoyed this particular episode, and as usual, I will see you guys next time.